The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Let's take a look at the German DAX like we usually do. As you can see, it's at the top end of that trading range that we've been in for the last 13 or 14 days. And if we take a look at the FTSE, which is going through a lot of news because of all the Brexit stuff, you'll see since the 20th of February, we've been in this really long trading range, bottomed by 7,000 on the upside and 7,200 on the upside. We actually made a double top there early this morning. Hasn't really done much from that level, but we'll take a quick look at it anyway. Let's take a look at the one that's really interesting. If you remember, this is a weekly chart. You'll remember about 4 weeks ago, we were talking about this Gartley pattern that we were seeing in the German bond, which is the equivalent to our 30-year bond. That's the German government bond. That's a beautiful Gartley pattern, folks. You got a perfect A, B, C, D. You're right up there against major resistance level. Not only that, but if you look at the day after the top, you had a double doji day. Guys, there was a lot of supply up there. You know, that's ideal when you see something like that. You don't always get it, but you do. Now we've had a pretty good move down. As you can see, we're relatively close to the 382 retracement down there at that 163 and change level, but whether it hits there or not, we'll give it a day or two. We're not trading this. We're just showing you this because it is related to our bond market because it's interest rate sensitive, and that's all related to what's happening in the euro and all the other things that are going on. I wanted to bring to your attention, we always talk about these fears that we always, that we work about. They're just absolutely ridiculous. But what we want to watch here is the fact that we have the fear of being wrong, the fear of losing money, the fear of missing out, and finally, the fear of leaving money on the table. Well, let's just take a quick look at this. Here's where we were in the, hold on one second here. I've got to take care of this, and I've got to do something here to get rid of this. Hold on one second here. Someone's trying to interfere with our show today, and I don't want that to happen. Here's our June Treasury, our June Treasury hogs. These were the June live hogs that we had down there at that 73 level, 73.15. We got out of those at 80.50. That was a 61% retracement. Had a very nice move to the upside. Now, you want to talk about fear of missing out? You want to talk about fear of missing out? We're going to talk about fear of missing out. Look what happened to this one. The next day, following the exit, it's up the limit, another 3 cents. We made 7 cents on the move up. We made 7 cents on the move up, and we missed another 3 cents by leaving it on the table. You're not going to, the only person that doesn't leave anything on the table is the person that gets the high or low tick, and that's God, and she doesn't trade that often. And remember, the fear of being wrong, you're going to be wrong a lot. This is all about probabilities. It's not about certainty. The fear of losing money, well, if you're fear of being wrong, you are going to lose some money once in a while. That's what risk control is for. And leaving money on the table, we already figured out. And fear of missing out, well, remember what Jesse Livermore said. It's much better to be out of a market wishing you were in than in a market wishing you were out. How about people that are short the S&P coming into triple witching today? I bet you they wish they were out of the market. So who knows? We're up against that major resistance still at that 28.20 level. So we'll see what's going to happen. Since we're going to be talking about that just a little bit, not much today, but here's what was happening with the artificial intelligence program last night in Europe. Let's get this up here. You can see that it had a pretty good idea of projecting the highs up here. We had a little bit of a sell-off this morning, and what we're watching now, this is what the forecast will be for today. The key thing to remember, folks, this has nothing to do with price. It's all related to time, and we have one time to look. That's 11:45 a.m. in New York today. Watch that. Remember, it's triple witching, options, futures, and cash. So watch that very, very closely, folks. It's usually a wild day. Triple witching used to be crazy, but now with all the electronic stuff and the different vehicles to trade it, they've toned it down quite a bit. So let's do, it worked relatively well yesterday. Yeah, I would say on the order of about 60%. It had a profitable day. It said the market was going to be a little choppy, and it was, and it really didn't do very much. It had very, very narrow range day. It really was. As you can see, yesterday, as a matter of fact, was the narrowest range day of the year, I believe, in the NASDAQ, either that or in the last 4 or 5 months. Got some information on that I think is pretty reliable, so that looks pretty interesting. Let's review here where we were this week, folks. We talked about the gold market. You remember we came in here, we were looking for a little bit of a rally here in the gold market. This is a 4-hour chart. You can see we were looking for the rally to go up into that 1311 area. We were able to see that. You'll be able to see it on the next chart. It did exactly, what we expected. You'll notice the little cycles that are down there. Those are little 3-day cycles. Those are 34-hour charts that you see, those bottoms. So that came in absolutely symmetrical. Believe me, these only work for about 3 times because this is the 3rd time. So get ready. Now, what we've done now, since the high we made at 1311, we went down to 1291. Well, the rally back, $13 right at the 61% retracement at 1304. So that's the key figure, to watch today is that 1304 level in the gold. But it's following relatively nicely on the shorter term, and that's pretty much what we're looking at as we look at some of these. So let's keep a really close eye on that as we go through these charts here this morning. We want to just talk about a few of them because they're quite interesting, as a matter of fact. And, I think those are the ones that we need to focus on. If you remember, those of you that subscribe to the 24/7 newsletter, and you'll notice that we were looking at this crude oil, a beautiful trend channel, as you can see. If you did any type of Keltner bands or Bollinger bands, there's no difference between Keltner bands and Bollinger bands. Charles Keltner did these back in the 50s and 60s. John Bollinger picked it up in the mid 70s, early 80s, and brought it forward, added a few neat things to it. But you can see there's a really nice parallel channel watching the retracements. The key here was that really nice ABCD pattern, coming in on the crude oil down there at that $55. And you can see here that we were looking for higher prices, coming in on the crude oil. And what we did last night was to look at it just a tad closer, because as you looked at it really, really closely here last night, you'll be able to see here that there was a really strong 1.27 expansion level there at the 58.90 level. The high is 58.94, and now we've dropped about 80 pips down into that level, which should have some pretty good support, somewhere around the 57.15 level. That's where those old highs were. That would be a 382 retracement, but that 1.27 could be another 3-drive pattern, much like we had seen in the euro and some of the other things that we're looking at. So let's pay attention to that crude. That could be really interesting here as we work through the day here. Okay, let's move on here and take a break. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, folks, we're going to take a look here at the Dow Jones Transportation Index. Very important. By the way, on a programming note, we are going to have a Chicago native on Monday. And because it's the day after St. Patrick's Day, that's the day that they dye the Chicago River green with food dye, and everybody drinks green beer, and there's not a sober person in downtown Chicago on Sunday. On Monday, we're going to have one of their natives, Mr. Norman Owinski. He is going to be our guest, and we'll be looking at him and what some of the great stuff that he always gives us. Getting back to the Dow Jones Transportation here, very important, folks. You notice the 3 lower highs that you see there going back September, November, and March. Those are the 1-3-5 pattern. They're spot on perfect. You'll notice the retracement. We were down 11 days in the Dow Jones Transportation. That has only happened a few times in history, they say, but that happened at that particular time, folks. It doesn't mean diddly squat, in my opinion, and the reason why is all you have to do is to go back and look here in December, from December 3rd to December 24th. Sure, it didn't go down 11 days because we had one up day in that group around the 5th of December. All the rest of them were down. You want to figure that? That's 17 days down. So the way they tell you these statistics, you know, well, they always say, what, liars? Well, never mind what it is. Okay. Oh, that's correct. Okay, Marshall, by the way, I have a great story for you that I'll talk to you about a little bit later that I think you'll enjoy. Okay, let's take a look at this Dow Jones Transportation. The reason why I bring it to your attention here is because with the market possibly getting ready to break out today, that could be a head and shoulders pattern, folks, because you'll notice that the right shoulder at that 382 level is higher than the left shoulder back in October. And if that's all we get, you notice the high we made 2 days ago was exactly at 0.618. So the key is going to be today. If we close really strong today, there's a possibility this could be a head and shoulders bottom, and that could be the thing that maybe pushes the stock market, you know, higher. So just watch it, because the Dow Jones Transportation, not many people trade it, but a lot of people invest in it. So it's how the goods are moved as we go across the country. So pay very, very close attention to it. I think it's something that we really need to look at. Regarding the crude oil, folks, we were talking about that crude oil, the possibility of making that high up there at the level of 58.90. And you'll note 58.84, you'll notice it had that 1.27 expansion. But if you go back to listening to what Jesse Livermore said in his book, always buy the strongest and sell the weakest. And if you take a look here at one of the elements of the crude oil, which is the heating oil, look at the heating oil here, folks, on the hourly basis over the last 6 or 7 days. You see the 135 pattern? The first three stops exactly at the 78% level. The second one goes up to the 61% retracement. And this is when crude oil is making new highs. So this is a very, very negative, very negative scenario. Now let's take a look at what happened. And let's take a look at what happened after that occurred, because I just did this a few minutes ago because I happened to be involved in this one. You'll notice here that we had the three drives and the 135 pattern, and now you're down below the 78. We're setting up for a ABCD down somewhere around 192. So let's watch that. It's going to be very, very interesting to see it. But that's a principle. You always want to buy the strongest thing and sell the weakest thing. That's something that you should do. I'll give you one other little tiny bit of information here. Let's say that things are not going too well and you've had a bad run here and you've got a few positions on. Here's what most people do. They take profits in the positions that are working and they keep the positions that are losing. The exact opposite of what you're supposed to do, folks. You should take care of your losses and let your profits run. So if you've got a bad run, get rid of your losses, keep your profits. And if you don't get rid of your losses, here's what you're doing. One, your analysis is totally kaput. It's not very good. It's not working. So that's one strike against you. Two, the amount of margin that you're using on your losing trades is starting to eat away at your capital. Not very good. Okay. And the third thing is if you keep the losers, you're not controlling your risk. So it doesn't work out very well with you. So always remember, if you got something going wrong, get rid of the stuff that's hurting you. That's the way I always did. I had 6 children. 4 of them didn't work out. I took them right back to the hospital and let them keep them. I kept the other 2, and one of them didn't work out, and I took it back too. So you got to be careful. You got to let those profits run, get rid of the losses. So that's the main thing to keep a close eye on. So let's watch that as we go here through these charts that we're looking at this morning. Very interesting. We want to look here at platinum. We've had several people ask us this question about platinum. We've had that nice bottom in the gold, you remember, and now we've had higher bottoms now in the platinum. If platinum can stay above 810, it's got a really good chance to get higher. It's a key level there at 810. Watch platinum. If breaking below 810 in the platinum is not a good sign, but right now it's looking pretty good. We held that level really nicely, rallied $37 an ounce, so that's pretty good. Someone asked a question, the difference between platinum and gold. Platinum used to sell at about $1,000 premium to gold. It's a more beautiful and more rare metal than gold, and for jewelers, it's just incredibly difficult to work with. And that's the key to remembering, why you're watching these things. So anyway, let's just watch this as we watch it unfold. But it's still in an uptrend. We've had higher bottoms now ever since December the 3rd. We had another bottom February 14th, and of course we had the one on the 11th this month. If we go below that one on the 11th, there's trouble in River City for the We'll see that. Oh, so aluminum sold for 10 times gold in 1980, David? Are you kidding me? Wow, I didn't know that. Thank you, David. David has just told us that in 1980, aluminum sold for 10 times the price of gold. Oh, 1890. 1890. Oh, that was probably a new, it had to be a new metal. They probably just found it, would be my guess. I think in London they call it aluminium, as I recall. That's from the old days of pharmacy school here. Let's move on to one of the currencies that we're watching really closely, folks. This coming week, we've got something that could be very, very interesting here in the Japanese yen. And now all I need to do is to find that little puppy and get it up here, shut the front door, and raise the rent. What did I do it? I do it all the time. Oh, let's move on. I'll get that one on the. Oh, here it is. Here, I got it right here. Never mind. Just not it. Hold on. Let me hit the wrong button again. Let's do the Canadian dollar instead. I've been asked to look at the Canadian dollar this morning over the last few days just to try to talk to you, to show you the difference in the harmonic numbers. As you'll know, you'll see here that since the March 6th, you'll notice how the market, those dark black lines, those are the harmonic numbers. You know, you're looking at roughly around 70 pips. The market moves 70 pips. You notice the first 70 retracement was exactly 61% retracement. The next 70 pip was a 382 retracement. So, you know, defy human nature. Find those yourself. They're very helpful, mainly for risk control, because if a market goes beyond a fib number, not good. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I want to say to take a look at this Tesla. You know, it is, hold on one second here, folks. I've got to get this moving here. There we go. All right. if you take a look at Tesla here, you'll see that the three tops up there where we had every 14 days apart, that's a down-sloping line. You see, that's the 1-3-5 pattern. Then on the bottom, you see the three drive to a bottom pattern. That's drive 1, drive 2, drive 3, coming in right around 272, and then it goes up. There's nothing showing right now that would suggest this would be a 1-3-5 pattern because there's no ratio here above that 294 level. If we were trading at around 301, 302, that could be a 1-3-5 pattern, but not the way it is now. You have to have two things. You have to have the ratios match up, and you have to have the time match up. And we don't have either one of those things, so it can't be a 1-3-5 pattern. That's the key to that pattern. That was given to us by Roy Longstreet and his son Bill. So that's very, very important to remember that. Now, the three drive to a bottom pattern is very nice because you've got the really nice symmetry between the drive 1, drive 2, drive 3. It hits it spot on at 272 and then rallies up to 298. So we're in an area. In fact, we're down quite a bit today. We're trading around 283 in Tesla. Must be some kind of news. I guess maybe one of Musk rocket ship might have moved on to somewhere else, but we'll have to wait and see if that happens. We'll go from one thing to another here. The bonds are still moving up a little bit, folks. We're trading at 146.09. I still believe that this never drive a car that you can't hear, folks. Let's move up here and take a look at this Treasury bond on the hourly chart here. You'll notice that we're trading at 146.09 right now. That's up strongly on the day. This is a head and shoulders pattern, boys and girls. It's got everything that you could ask for. And you're getting this from someone who's more bearish than just about anybody on bonds long term, but not the short term here. We got below 143, I'd be as bearish as could be, but this doesn't look bearish right now. We got the left shoulder there in May. We got the head in October. We got the right shoulder in March. And the key to this is, notice the right shoulder. That bottom we made there at 143, much, much higher than the left shoulder, folks. That's a very powerful sign. That's what defines the head and shoulders pattern. Much like when you're looking at a three-drive pattern or a 1-3-5 pattern, you have to have the three things. You have the time symmetry has to be right. The ratios have to set up to be right. And then you have to have a place where it looks like it is ready to have great support, and that's what we're looking at here. Now I have to answer a question that I try to answer all the time, and that is why I don't use Elliott Wave in the conventional way. Folks, I've been looking at Elliott Wave since 1969 and 70 when my teacher, John Hill from Futures Truth out in Hendersonville, North Carolina, showed it to me. He had a difficult time counting the waves. And I have had in my trading room in Pismo Beach, California, the best Elliott Wave guys in the country and in Europe. Tony Plummer, Glenn Neely, Bob Miner, Bryce Gilmore. I mean, all of them were there. And they would argue whether it was a 2 or a 4 or a 3 or a 5 or, and all I'm doing, folks, is really, really simple. I'm looking at simple retracements. 618, 786, expansions 127, 1.618. I line that up with the ABCD pattern that was in the Gartley book on page 249. I don't have to worry about counting the waves. That's beyond my pay grade. I'm interested in a place where I can go in and not risk very much. I know Elliott Wave works, but for this old cowboy, it's beyond my pay grade. I just have a hard time looking at these things. And not only that, but if you get 3 Elliott people in the room, you're going to get 9 different answers because all of them have an alternative wave count. I'm going to get all kinds of flack on that, but so be it. That's my 2 cents worth, and I'm sticking to it. So that's what we're really going to be watching here. So we'll see what's going on, and we'll go from there. All righty, let's move. Is the pork still running? Mr. Z, is the hog still going higher? Going to make me feel bad? That's okay. We made 8 cents in it. That's not too bad. Anyway, we'll keep an eye on these hogs. They've really started to pick up, emotionalism to the upside. So we'll see how that works out. All right, let's move on to another one that we really want to discuss here. This is the big one today, folks. Let's just get this up to take a look at it. This is as of Sunday. And I want to remind you that we are now above that the highs of that that last run there, we still haven't, gotten above that level that is really key. This is going to be what's really interesting. If we break into new high ground today in all of these, we're not going to do it in the Dow Jones, of course, and we're certainly not going to do it in the Russell. It's acting the worst. So this could, with triple witching today, you couldn't get me to put on a long-term trade in those things either direction. So that's really what we're taking a look at. We'll have to wait and see. The other question that someone has asked is about the U.S. dollar. Believe me, folks, that U.S. dollar has had a major top up here. This is, you can see what's happened all week. We've been down every day this week as the euro's been rallying, and that was a real key level because we took out the highs of November and didn't go anywhere. Look what happened when we took out the highs of August, so, all I'm saying is you get the microscope out and take a look at those swings as they're happening, and it might give you a good place to enter, either long or short. The Canadian dollar is another one. I mean, we've already showed what it did on the harmonic numbers on the downside, and it came very, very close to getting to our longer-term target this morning. We missed it by a little bit. We're trading around 133 and change, but we still think we're going to get to that 132.40 level. This has been a very good currency from our side of the tracks because we've been on the right side of the trade, which always helps, but we'll do one thing at a time as we look at this. We need to check out Bitcoin. We've had another question from one of our listeners on Bitcoin. We want to get this out here to let you see. Bitcoin is still holding this 138.50, 139. We need Bitcoin to get above $4,300 a share, slightly lower than it was last December at 19,000 and change, but we'll have to let the market determine where it's going to go right now. It's all about blockchain, folks. I don't think it has a little bit to do with cryptocurrencies, but more or less with blockchain than anything else would be my guess on that. So we'll see if that's the case. Someone's asking if that chart on Tesla was bullish, and no, what it's doing now is we had the 3 drive to a bottom pattern, and now it's pulling off. If you think you're bullish, Tesla, the 61% retracement on that, I believe, is 281, and then you stop it below the other low, which is 272. There, you quantified your risk. You don't have to worry what wave count that is. I mean, hey, folks, I don't disagree with Elliott, okay? It's just not for me because, I had trouble with mathematics. The 5 years I was in the 3rd grade, I had a difficult time with it. When I finally moved on, I was able to add, subtract, multiply, and divide. How I ever got out of pharmacy school, I'll never know. And how I ever got a master's degree in business, I'll never know. But I made it through. So we'll see. We'll take a break here and look at a couple other things. Happy Friday, everyone. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks, and David White here at TFNN is talking about Isaac Newton. He was involved in the South Sea Island bubble back in the 17th century, and he didn't do very well with investing. He did pretty good with mathematics, but he didn't do well with investing, and he lost everything. He was really close to being a pauper when he died, but that was due to mainly the South Sea Island bubble. I posted a chart here. By the way, just to give you an idea about some of the history of this, we have someone, a very dear friend, belongs to the TFNN family, trades in here every day, down there in the old southern part of the USA, has one of the rarest coins in the world, folks. It's a $20, well, it's not $20, it's a gold piece with a picture of Isaac Newton. He was the first Chancellor of the Exchequer in the UK, and there's only 6 of those coins in the world. And they're worth more than the price of gold, as I recall. It's a good 6 zeros, almost 7, but it's really an incredible piece, and the history behind it, where the gold came from, the mines from Spain and stuff, is just really, really exciting. And anyway, that's history. Let's take a look at the Dow Jones Utilities. We've got that double-topped form, as you can see here, back in October, where we are right now. We took that out this week. But the important thing to look at, folks, is the ABCD structure that you're seeing here from June. You'll notice that's the A leg down there from the C. It becomes the A leg because it's a higher low. And then you go up to your B point, which was in December, down into this January the 26th. And your D leg comes right up here where we're trading this morning. So this is a completion of a double top and an ABCD pattern at the same time, and a 1.27 expansion. Those are 3 ratios coming together. That's mother, God, and country. So if you're interested, I don't trade the utility. I don't even if you can. Oh, they've got to have an ETF for it for sure. They have an ETF for everything. But anyway, that's what that is forming right now. So it's, as we speak, it's going into a very, very strong level here to watch it very, very closely. Okay, let's remember, folks, when we were talking about the timing today, the real key time, folks, is at 11:40 a.m. New York time. That's what it's nothing more. Don't look at anything else until 11:40 in the morning. It has nothing to do with price. We're trading around 28.21 right now. There's going to be some resistance at 28.30. There'll be some support at 28.10. But if you're interested in the time of the day, if it's going to work, and remember, it doesn't work all the time. You're looking at about 65% of the time it works pretty good. The rest of the time it's not too good. Anyway, let's look at that at 11:40. We won't be here at the time, but keep an eye on that. It should be making a higher low at 11:40. The high end would be 28.30. The low end would be around 28.10. Remember, it's triple witching. We have options and futures expiring today. So always craziness going on as we go through some of these things as we look at them today. Any other questions we might have? No, I think we're okay on that. We've covered the platinum. We've covered the Canadian dollar. We've covered the heating oil. And I believe we need to cover the NASDAQ. And here's where we are. We're up a little bit higher. Not much yet, but we're right into this same thing. We've already showed the the weekly head and shoulders pattern on this. Now you're seeing it on the daily. We're up against that 78% level, which is up there at 73.10. I believe that's probably where we're trading right now. That should be some pretty good resistance. That's above the highs that we made in November, also the highs we made in December, and we've had virtually no correction, to speak of, since December 26th. So we're still a tad overbought, to say the least, but the market continues to go higher, so you can't really stand in front of it. But watch it today, because this is triple witching, and you usually got a higher opening. Watch that time between 10 and 11, because that's what we call amateur hour, and people got to buy. Please let me in. Please let me in. I can't miss the last leg, and that turns around not to be too good. So pay attention to that one today, folks. It should be one that looks very interesting. We're going to bring this chart up of the euro, because this has to be updated this week. This is the weekly chart here on the euro. We went right down to 111.70. We took out all the stops from way back in September. We completed that 3-drive pattern that was there on the daily, and now we're trading up around 113.30 this morning. That's 100 pips from where we closed on Friday. And so, you're only talking about 100 pips for the week. That's 20 points a day. That's virtually nothing. So watch it very, very closely, because it's interesting to see how these things are going to unfold here as we look at some of these things. The wheat, I believe I did the wheat already. We've made a major bottom in the wheat. Well, let's do it again. We can do that. We've got plenty of time for all of our friends here at TFNN. Let's just get up the old May wheat, and we will keep. Oh, here we go. Here we go. We got it coming up right here. Yeah, we're having a nice run. We're up over 35 cents from that 3-drive bottom that we looked at. We'll get you'll see the larger term ABCD here. And no, you don't have to be sorry, Terry. That's what we're here for. There we go. You can see the ABCD pattern down there. Went a little below the 786. It went down to 0.84, but the 3-drive pattern, we focused on that several different times. In fact, we'll get it up here, and you can see what's going on here. You'll see the hourly chart that we posted back on Tuesday when it was completing there. Really nice bottom. You had 3 drives to a bottom between the 20th and the 1st of March, and then 1st of March to the 12th, 12 days on each side. Perfect symmetry, ABCD, everything you could ask for. Now you've had a pretty good rally. You can see the higher bottoms that you have in here right now, and we're trading around 456 this morning. Anything above 465 is going to make the people that sold this stuff pay attention, because it could be a huge short covering rally on this one if it decides to turn. But right now it's still in a downtrend with strong resistance up at that 465. Anything above 465 in that May wheat will certainly give you some pretty good indications that we're wanting to look like it wants to go higher. So we'll see. That's basically what we're watching here right now. Someone's also asked me the difference between scalping, shorter term profits versus long term trading. Folks, some people are very good short term scalpers. They have the ability to focus very intently over a period of an hour or two, trading, just short term swings. I don't like to do that anymore. I did it years ago. And I just thought, well, I like to look at the 4-hour charts and the hourly charts, put something on, let the market do its thing, and don't look at it. The worst thing you can do if you're in a trade, folks, is to watch what you're trading. I can promise you with 100% accuracy that that's the worst thing you can do. And the reason why is we've got these computers now that tell us to the second how much you're either making or losing. And believe me, this is what happens. You focus on how much money you're winning. If you focus on the losing, you don't even look at that, because that's pain. And our bodies are, systematically engineered to avoid pain. And so that's what you do. You don't watch it, so you're not taking care of your losses. If you're not watching the monitor, okay, you got the emotion out of it, okay? And that really because you don't have any control over the darn thing. Nobody does. The only thing you can control is the risk. So that's what you should spend your time on. The problem is these folks that are out there, they're telling you to watch this and watch that. And, watching that monitor is a mirror image of all the psychological baloney that's going on in your life at that particular time. I can remember an instance, it's coming, here at the end. I'll bring it back after the break here, about when I was trading at home in Westlake Village once with the little kids. Anyway, I'll bring that back. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, there's the chart of the June hogs. They're up 6 cents from where we got out. So we made 7, left 6 on the table. Fear of missing out. Don't ever eat pork again. Actually, one of my favorite meats is spare ribs. Absolutely love them. Let's take a little trip down memory lane regarding this and thinking about all these things that are going on with your accounts. When I traded at Drexel, they had a Reuters machine put into my house in Westlake Village. So if the traffic was really bad on the 101 freeway, I could either stay in and work at home, or I could, just check prices and go in later. So what I did when I shut the door there, I put a little wooden sign that says, "When this door is shut, Dad is not home. So I didn't want to be bothered so that I'd be able to do that. And every day the kids would come in and open the door wanting something. I say, hey, can't you read the sign out there? And they say, that sign's for Mother. That has nothing to do with us. So that's the eyes of little kids, how quickly they understand how the world works. Keep an eye on the S&P and the NASDAQ today, folks. If that NASDAQ closes above more than 60 or 70 points higher today, that's going to bring that picture of that head and shoulders pattern into possible failure. We'll need to look at that over the weekend very, very closely. We'll have Norm Winsky, of course, on Monday. I will not be here on Tuesday and Wednesday, so we'll have somebody else probably in. But keep an eye on that NASDAQ. That's the real key one today. I don't think it means anything if the S&P gets up around 28.30. That'll just be some stops that are up there. We're trading at 28.24 right now, so that's a heartbeat away. And we can do that very, very easily. So there's just a few of the things that we're, paying attention to this morning. The euro is still looking pretty good. Any close above the euro, above that 113.60, would really be bullish to the euro, i.e. bearish to the U.S. dollar index. Those are all of these that we've been involved in relatively easily, and so those are the levels that are important. So live every day in an attitude of gratitude, and may God bless.